Have you or your investment manager's views of the economics of Apple's business changed since Berkshire first invested in 2016?
Warren Buffett just dropped a bombshell. In the last 3 months, he sold about 13% of his Apple investment. The quarterly filing released over the weekend revealed that he holds about 790 million shares of Apple, about 120 million less than the previous quarter. That's a whopping $20 billion sale of stock, the equivalent of him selling his entire Coca Cola investment. And it's not like he needs the cash. He already has $190 billion sitting on the sidelines. Fortunately for us, just 3 hours after the filing was released, Buffett took the stage for the Berkshire Hathaway shareholder meeting and explained why he decided to sell and whether he plans on selling more throughout the year. Surprisingly, his reasoning is probably not what you expect. In fact, Apple isn't even the only stock that he's been selling. So let's dive into this enormous sale of Apple stock, the other stocks he told us he's been selling, and also Buffett's view on whether the stock market is potentially in a bubble. I just want to pause the video quickly to thank Morning Brew, our sponsor for the Berkshire Hathaway trip. Morning Brew is a free daily newsletter built for busy people and busy professionals. They condense the most important business news into quick, witty stories that make it easy and enjoyable for anyone to stay informed. The newsletter is delivered to your inbox each morning, and I've been using it to discover current events that I might want to explore further in my videos. In fact, Morning Brew had a story leading up to the Berkshire Hathaway shareholder meeting, and another one summarizing some of the notable moments afterwards. And again, it's completely free. More than 4 million professionals are already reading Morning Brew. It takes 10 seconds to sign up, so there's absolutely no reason not to try it. Sign up for Morning Brew today by clicking the link in the description or heading to morningbrewdaily.com/Hamish.
One of the big stories is that Berkshire has trimmed its holdings of Apple.
The sale of Apple stock by Buffett last quarter is by far the most significant since he initially bought the stock in 2016. Between 2016 and 2018, he acquired about 900 million shares in the company for about $36 billion. Buffett, for the first time, gave a fascinating insight into why he made such a big investment in Apple 7 to 8 years ago.
I think the psychologists call this apperceptive mass, but there is something that comes along that takes a whole bunch of observations that you've made and knowledge you have, and then crystallizes your thinking into action, big action in the case of Apple. It just happened to be something that entered the picture that took all the other observations, and I guess my mind reached what they call apperceptive mass, which I really don't know anything about, but I know the phenomenon when I experience it.
In this case, the many experiences he's had with consumer-related businesses over the years gave him a unique perspective on why the Apple investment was highly likely to work out in his favor.
Well, I watched what was happening at the Furniture Mart in terms of people leaving the store, even though we were selling Apple at a price where we weren't even making any money. But it was just so popular that if we didn't have it, people left the store and went to Best Buy or someplace. And
Buffett realized that the iPhone, and therefore the many services and accessories, were extremely sticky to the consumer.
if they have an iPhone and they have a second car, the second car costs them $30,000 or $35,000, and they were told that they never could have the iPhone again, or they could never have the second car again. They would give up the second car, but the second car cost them 20 times what the iPhone did. So now people don't think about their purchases that way, but I think about their behavior.
Over the years, he has trimmed small amounts of the investment, 12 million here, 3 million there, but nothing even close to the 120 million that he dumped in the last 90 days. Which begs the question, has his views on Apple as an investment changed?
Have you or your investment manager's views of the economics of Apple's business or its attractiveness as an investment changed since Berkshire first invested in 2016?
No, I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have now.
Despite the huge sale of stock, Apple remains by far Berkshire Hathaway's biggest equity position. Valued at $135 billion, it's far above Bank of America, American Express, and Coca Cola, which are worth about $25 to $40 billion each. Buffett was pretty quick to quell concerns that he might have been selling the entire stake in Apple, but he didn't actually rule out selling more throughout the year. Theoretically, he could sell another $90+ billion of Apple stock and it would still be his biggest position. But maybe the most interesting part of the story is Buffett's explanation for why he's been selling. And it's probably not what you think.
Your favorite holding period is forever. Holding American Express or Coca Cola for decades. Berkshire recently went in and out of Markel, and you I believe, sold and later bought Oxy, which I think happens to everyone all the time. But can you maybe, to us, give examples of your thought process when you exit positions? Thank you.
Well, there are various reasons for exiting positions. One is if you need the money, but that doesn't happen very often.
It's pretty obvious that the need for cash isn't why he's trimming Apple. He has almost $190 billion in cash and short-term treasury bills, which is about 36% of his stock portfolio. Buffett doesn't need extra cash right now for another investment. He wants extra cash as an investment.
When I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive in one.
Investing is a game of opportunity cost. It's a game of comparing the return of each place money could be invested and allocating it accordingly. And just like stocks, cash can earn a return through short-term US Treasury bills. Currently, a one-year government bond is yielding over 5%, which isn't a bad return, especially considering that stocks are pretty expensive right now. Apple stock specifically has a price to earnings ratio of about 28, or an earnings yield of 3.5%. So they have to grow their profits in a meaningful way just to provide an equivalent return to a treasury bond, which is risk-free. That's not to say that treasury bonds are going to do better than Apple stock from here. The point is that with stock prices as high as they are today, putting some money in bonds at a 5% return is a genuine consideration. But there's also one other important reason why Buffett sold a good chunk of Apple.
Something has to give, and I think that higher taxes are quite likely, and if the government wants to take a greater share of your income or mine or Berkshire's, they can do it.
Buffett is sitting on a huge unrealized capital gain with his Apple investment. Before the recent trim, the position was worth $175 billion, of which about $140 billion is pure profit. Profit that once he sells the stock will be taxed at the long-term capital gains rate.
We are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past.
Since 2018, corporations have been paying a 21% tax rate on capital gains. But for almost 25 years before that, the rate was 35%. So there's certainly precedent for higher taxes on stock sales. And now there's also a good reason to expect higher rates in the future.
They may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn.
The reason is that the US currently runs a budget deficit. In 2024 so far, the federal government has collected about $2.2 trillion in revenue while spending about $3.3 trillion, giving them a deficit of $1.1 trillion in the first quarter of this year. A deficit that likely has to be eliminated soon, or else the nation's debt will spiral out of control. Decreasing spending on things like the military or social security is one way way the deficit could be reduced. But it's very likely that higher taxes will be considered as the main way for reaching a surplus. Higher taxes are very unpopular, so if they're going to be introduced, it's probably going to be aimed at corporations and the ultra wealthy. So by trimming some of Apple stock now, Buffett hopes to save some money that he expects would have been lost to higher taxes in the future. But it wasn't just Apple that Buffett was selling during the latest quarter. During the meeting, he also revealed that he sold the entirety of their Paramount investment.
We sold it all and we lost quite a bit of money, and that happens in this business too.
Berkshire Hathaway's investment in the media giant began in 2022 when they acquired about 90 million shares. And since then, it's been a complete disaster. The stock is down 65%. So in Q4 2023, Berkshire sold about 30 million shares, reducing the position by about 32%. And per Buffett at the shareholder meeting, now the entire position has been sold.
Actually, owning Paramount made me think even further. I like to think deeper, but I certainly thought harder even about the whole question of what people do with their leisure time and what the governing principles are of running an entertainment business of any sort.
With all this selling activity and Berkshire's enormous cash pile, does Buffett think that the market is overvalued or even in a bubble?
At the 1999 annual meeting, you mentioned that if you owned all of America's 500 businesses, you would be making $334 billion while paying $10.5 trillion. You emphasized that this was not a good return on investment. Do you see similarities in the market today and the 1999 levels?
I don't really think of whether it's similar to 1999 because I'm not that good on chronology anyway, unless something really dramatic happened. I don't think that way. I just look at what I can do every day.
Buffett doesn't take a view on whether the broader stock market is overvalued, and especially doesn't make comparisons to past bubbles. He's simply looking at the current opportunities in the stock market and for storing cash in bonds and allocating money where he sees fit.
But you also can say that there will be times when having huge sums available extremely quickly, maybe it'll be once every 5 years, maybe it'll probably be more like once every 10 years or something. But as the world gets more sophisticated, complicated, and intertwined, more can go wrong.
Buffett doesn't mind holding cash right now because it's earning a decent rate of return just sitting in government bonds. And the even greater advantage is that he'll have lots of money readily available to buy cheap stocks in the event of a market crash. Subscribe if you enjoyed and check out these videos next.